markets? Well, my next guest says there are some exchange-traded fund investments that could be real winners, some technology ETFs perhaps. I want to welcome Joe McAlinden, fund manager for Catalpa Capital. He's also the former chief investment officer at Morgan Stanley. Good to have you with us, Joe McAlinden. So before we get into the details of some ETFs, we were just talking before you came on. Boy, your V-shaped call looks to still be pretty good. The
V's playing out in real GDP growth. It's, in fairness, it's not showing up in employment or in housing yet. We can talk about both of those if you like. But clearly, yeah, the world economy has turned around, and a very sharp turnaround. The main reason is central banks all over the world were printing lots of money. Most of them have started to slow down that process. The U.S. is pedal to the metal, and I think Bernanke's comments today just reconfirmed that. And therefore, I think that the next 3 to 6 months, we're just going to go higher.
3 to 6 months, we go higher in the United States.
Right.
But after 6 months, you're a little bit concerned.
I think that we're going to still be in a bull market, but that the inflationary consequences of excessively stimulative monetary policy will be starting to show up by then. We've seen what's happened in the emerging countries. When they have had that problem, they've had to deal with it. It hurts the markets. So I don't see a big bear market, but I think we could be in for a 10-15% correction along the lines of what we had in the summer of 2010.
All right, well, pull back on the gloom for just a minute. We'll deal with what happens later on. But right now, for example, an exchange-traded fund, I know that you've been following XLE.
Yeah.
You think financials, go for it. You think that this is going to be low inflation, at least core inflation, low interest rates. The banks, maybe they're going to be allowed to start giving some dividends out to investors, and that's going to make people want to own the stocks.
Right. So two sectors that we like that are almost contradictory. But one is the XLF, which is the
financials, and XLE is energy.
Right. And if you want to drill in more narrowly into the big banks, there is one called the KBE. Right. And then for the smaller banks, there's one called the KRE.
Right. Those are the Keefe, Bruyette, and Woods regional bank ETF, and then there's a larger bank ETF.
And I actually think both of them look very attractive right now. And yes, for all the reasons that you just stated. The simplest one, though, being that the yield curve is such that it just allows banks to just coin money if the volume picks up, and the loan volume is picking up. The media hasn't focused on that yet. Commercial industrial loans have turned around, and they're going to be very robust, we think, in the current year ahead. The XLE is the ETF for the oil industry.
Right, for energy.
And I think that that's a good bet as well, which is almost seems like a contradiction. But I think that energy prices generally are going to remain firm, head higher. I said $100 in U.S. priced oil on this show a few months back. I still think that's going to happen.
You're not so far away. We're about $89, $86 a barrel.
I think the stocks are going to outperform the crude from here up because of the way the money drops to the bottom line in their P&Ls.
All right, so take a look at energy exchange-traded funds, financial exchange-traded funds. Right. What about investing in technology, like exchange-traded funds that are focused on technology?
We were big bulls on the whole technology complex for quite some time. Now I think you need to be more narrowly focused at a couple of things that are blindingly obvious. I saw you while I was waiting in the green room, we're reporting on the new HP pad. I've got a Mac one personally I got as a present. They're phenomenal, and I can't wait to see these new generations. I'm not sure who's going to win, so and you don't really have to make that bet. The thing is that the guys who produce the wireless infrastructure that make these things work are going to be having a tremendous period over the next 2 to 3 years. And there's an ETF called a PXQ that gives broad exposure to those companies.
We're talking about companies like JDS Uniphase, for example.
Right.
Juniper Networks.
The optical guys and so on.
Notwithstanding the report from Cisco today, gross margin miss, stock down 8% after hours trading.
You want to avoid, in my opinion, particularly in technology, what we call idiosyncratic risk, putting all your eggs in one basket, making a big bet, because there's always going to be a negative surprise from one company or another. By going this basket route, the ETFs, you're spreading your risk. I'm not sure what the weight of Cisco is in that ETF, but it's not 100%. I know that.
All right, so PXQ, that's the ETF there for technology, and then you've got the two Keefe, Bruyette, and Wood ETFs, and then the energy, XLE, for financials, and then XLE for energy.
Yep.
All right, we're going to have to leave it there, but I want to thank you. You're going to be with us in the future because I know you want to talk about housing, so I'm looking forward to future visit.
It'll probably be more timely in the future.
Joe McAlinden, Catalpa Capital, always a pleasure to be with you. Thank you.